Hello and welcome back. I'm Natalie MacDonald. You're watching another Sydney Direct. Now, Australian manufacturing has shown growth for the first time since July. I'm talking to Peter Byrne, Director of Public Policy at AI Group, the group that puts together this index, to find out the facts behind the figures. Peter, thank you very much for receiving us once again. Great to see you.
Thanks again, Natalie.
Okay, so Australian manufacturing growth is in the black now for the first time since July. Can you firstly expand on how this index is put together and also how November's results score against previous more lackluster months?
Sure. So we survey a number of companies and we ask them about their employment relative to last month, their production relative to last month, their sales, their exports, their input prices, their selling prices, their inventories, a range of things. They're the main ones. And we put all of that together into a single figure. So we weight those responses and come up with the headline Performance of Manufacturing Index. So this month that rose by 0.7 points to just above 50, so indicating expansion. And that's made up of a mix of different sub-indices. So production fell, sales rose, employment rose a little bit, new orders rose, input prices rose quite a bit, selling prices fell. And in the combination of all of those, we get the 0.7 increase to 50.1, so just indicating expansion.
How much does low interest rates and weak dollar at the moment, how much does this assist businesses within this sector?
Well, it doesn't. Neither of them hurt. So interest rates are lower. So for companies with a stock of debt, that's cheaper to service that debt. So that's the obvious one. And in fact, it gives them an opportunity to reduce debt because they're paying a lot less in interest than is their habit. And so that they've got some spare money, assuming sales are holding up. So it also provides an incentive to invest in that the cost of capital is low. And so if they've got opportunities to invest, if they can see those opportunities, then it's cheaper to do so and they're more inclined to invest. At the moment, in manufacturing in particular, we're not seeing a huge demand for capital. People don't have confidence that they're going to be able to sell stuff, and they're not borrowing very much.
How well then do you see this uptrend in manufacturing growth translating into, softening those unemployment figures really?
I don't think a little bit of growth in manufacturing is going to move the dial very much on unemployment. So unemployment is 6.2% here, and that's 10% higher than it was a year ago. So the number of people unemployed is 10% higher. Employment is growing very slowly across the economy, less than 1%, which is not great for Australia when population is growing quite considerably. So the employment market is flat and manufacturing is less than 8% of the economy, and a little bit of growth in manufacturing isn't going to have that aggregate effect. Unless it's connected, the growth in manufacturing is connected to a broader lift in business confidence and consumer sentiment, then that broader tide would lift both manufacturing and general employment. But that's a little way off yet, I think. Can I get back to your question about the dollar as well?
Of course.
So the dollar at round about 85 US cents for an Australian dollar is, if I look back to April 2013, it was $1.06. So that's very close to a 20% devaluation. Now, in anyone's language, that's quite a boost to competitiveness for domestic producers. And so that's a marked improvement. The Australian dollar is still well above the average since the Australian dollar was floated back in '83. So it's still well above that. But compared to what manufacturers have been faced with over the last, say, 10 years, 85 cents is not too bad at all. And so that's a boost to the ability to compete with imports, and also a boost to export sales or export competitiveness. We're in that period of 10 years or so when the dollar was quite high, Australian manufacturers changed their business models quite considerably. so that they were importing more inputs, they were offshoring more of their production, they were investing abroad. Now, all of those were sensible responses for a high dollar, but what it means is that they are now less exposed to the upside when the dollar falls because they've got all these inbuilt hedging strategies. Less exposed to the upside than they were to the downside when the dollar rose. So it will take a little while for business models to migrate back to readjust to a lower dollar, and when that happens we'll see a sustained increase in competitiveness.
This ties in very well with my last question. In your view, is now a good time for items such as the Australia-China Free Trade Agreement and also now new trade talks also with India?
Well, there's two timeframes. So is now a good time? In the immediate short term, what it's going to mean is there's an intensity of competition because the very small tariffs that Australia has on goods from China or in general will be removed. In some cases they'll be phased down over a couple of years, but they'll be removed, and that will contribute to a somewhat more intense competition from goods imported from China. But that tariff's only 5%. So in that sense, it's not a great time because manufacturers are struggling to competitiveness. But the bigger picture for manufacturers generally and the Australian economy is that the free trade agreement with China and the talks with India create opportunities for Australia to link more closely with 2.5 billion people in trade terms, and that sort of puts into the shade the short-term rise in import competition from a small reduction in tariffs. So that will create a lot of opportunities for Australian manufacturers to export into those regions and to some extent to invest and to do business there. So next to the opportunities, the costs are pretty small.
Peter, thank you very much. Great to receive your comments again. Thank you.
Thanks, Natalie.
That's all we've got time for right now, unfortunately, but I have no doubt we'll be hearing from Peter Byrne again very soon. For now, it's goodbye from me.